Okay, good morning. To start off our Monday, apparently Learning Catalytics upgraded over the weekend. It has been and I am experiencing the same messages you get. I actually have a session started to get it. No panicking here. You don't necessarily need to do anything just this moment. But to get in, I have refreshed a couple times and then it let me in. When I went in, it said the website's under heavy usage or some message like that. So what we're going to do right now, my experience in the past is the people get into the office at 8 a.m. I've already emailed them, and then they do something to fix it. So I have a question out there. The session is there. Occasionally hit refresh. I'm not closing any questions. There's some debate whether we'll use Learning Catalytics today or not, but please know that I'm aware of it. So just hang on for the moment, and we'll see. We'll see if they get it resolved. I'm assuming that it'll get fixed sometime after 8. I have already emailed my person that I work with at Learning Catalytics, but nobody starts anything till 8 a.m. So we'll just take it where I'll put questions up as we go, but I will be very clear if we see that Learning Cat. Oh, 42 people, 45 people have answered. Okay, so we're going to give it a few minutes, get everybody on, and kind of keep going. So in here, and so if you're online, talk to Amir. He'll keep me informed of what's going on online. In the class here, are people having success getting in? No? Okay. Well, we're going to leave this first question open for a while, and we'll see. Don't worry, no one's going to be. You're not going to be penalized if they continue to have issues. Usually my experience is that they realize something's wrong, they reset the server, and then we're ready to go. And if our class weren't at 7:45 on Monday, we would never have this issue. Okay, so we're good so far? Okay, so starting class today then, couple things administratively to get us started. So I do have this question, when's practice exam 2 due? Practice exam 2 counts as a quiz. Practice exam 2, we have an exam next week. Practice exam 2 is due no later than 4 p.m. Wednesday. Take practice exam 2 before you take the exam, okay? So the answer on this one is before you take exam 2, but no later than 4 p.m. because that would be the latest you could start the exam. The notifications on the okay. So next week is our exam. We do not have class next week. Actually, I was looking at the calendar. Next week is our exam, so we don't have class. The following week, we have class on Monday, if I have my dates right. We have class on Monday, and then Wednesday is Veterans Day. So the week after the exam, we only have class one day. So exam 2, it is over chapters 4 through 8, the material that we covered in class. It starts next Monday, goes through Wednesday, November 4th. You have to start by 4 p.m. Okay, if you're at section 7 or 8, please schedule with ProctorU soon. Best selection. I don't have a slide on it, but I wanted to mention the extra credit project. We have an extra credit project that is available. It does take some time, and I wanted to give you some highlights of it. First of all, if you go into Blackboard, there is a link on the left-hand side called Extra Credit Opportunity. I'll be following up with an email sometime in the next 2 weeks, but it's been there all semester. We have had people complete it already. It is a project in my accounting lab. It's the accounting cycle, and the accounting cycle in this project is 10 steps, and basically you're posting transactions, you're recording transactions, posting them, preparing a trial balance, and preparing financial statements. If you're an accounting major, absolutely, positively, you should do this. This is very good for you, very good in the future. Anyone can do it. It concerns that material that was in the first a few chapters of the book, primarily chapters 1, 2, and 3, and it applies the whole rest of the time, so you certainly have gone through everything to do it. It looks, in my accounting lab, it's under due homework, and it is, quote-unquote, a homework assignment, and basically, it will take you more than one sitting. You start on it, you do one of the steps, maybe come back to it, do another step. It saves as you go. One change I made to the project after Amir's working through it and we were talking back and forth, my initial requirements, you had to get 90% on it to earn credit for it. I lowered that threshold to 80 just to give you a little more wiggle room. You obviously should try for 100%, but you can get credit for it at least if you get 80% on every module. But anyways, this extra credit assignment, we'll talk more about it after exam 2. It does take some time to do, and it will potentially add to, if you do it, it's an all or nothing. If you do it and complete the whole thing with a grade of 80% or higher, it will add 2 percentage points to your course grade. So if you end up with an 88 in the course, I will make your grade a 90. Now, this is logistically, administratively, for me, it counts, it shows up as homework in my accounting lab. There's nothing I can do about that. So if you start it and you get a 20% on it, yes, it's going to make your grade look lower than it is, but it's not really. What happens, I have to leave it in there. The very last, like after finals, somewhere in that time during finals week, what I'll do is I'll take all the scores from the extra credit project. The extra credit project will be omitted from your grade then, and then I'll manually add in everyone that completed the whole thing. I'll add the 2 points to your score. So let's say you start the extra credit project, decide you don't want to do it, and you have this low grade hanging out there. Don't worry, it will be removed from your grade before I do computations. I just, logistically, administratively, there's no way for me to have this project in my accounting lab without it showing up, but know that I will omit it in the end, and then those of you who have completed it, I will be adding the 2 points to your grade. So I'll talk more about that after the next exam, but I did want to put it on your radar. So if you know you want to do that, that is the extra credit that's available in this class. And just for your planning purposes, you have till Saturday, December 12th to do it. There's no extensions on it. You have to complete the whole thing. You can't complete half of it and get half credit. The accounting cycle is one big thing, and so you have to complete all 10. But just keep that on your mind. You may want to decide, oh, I want to do 2 modules a week for the next 5 weeks and get it done and get the extra credit. People always ask me for extra credit, so there it is. This is the first semester we've had this available. So again, I'll talk some more in 2 weeks, but I wanted to just put it out there that it's available. Okay. Oh, good. We have 129 responses. We have 129 responses and 123 students. I've never seen that. Kind of interesting, huh? I love upgrades. Okay, so the question is still going to be open. Everyone that's physically in here, have you been able to get into Learning Catalytics? Is it working okay now? Yes? Can you what? Let me go back here. Can you see it there? You good, Colin? Good? Okay, so this week we're covering chapters 4 and 8. Chapters 4 and 8, 2 chapters in 1 week, it's not a big deal because we're only covering parts of both chapters. So starting with chapter 4. Chapter 4 is what we're doing today. We are only covering Learning Objective 3 in chapter 4. We're going to talk about something from a different learning objective just briefly to introduce it, but we're only doing the one learning objective. So that's why we can do Chapter 4 today because we're only doing a piece of it. Chapter 4 is very interesting reading, but we have to cut somewhere in the class, and this is a good chapter to do it. So Chapter 4, we're going to talk about cash. Internal controls and cash is the topic of the chapter. Internal controls are those things that are in place to prevent fraud and errors. So we have ways we prevent them, detect them, and correct them. So when you have a cash register, if you're a cashier or a cashier at the grocery store and there's a register tape inside, the cashier enters all the sales, puts the cash in the drawer. Someone else has access to that internal tape and they compare the cash in the drawer with the sales that are recorded in the register or in the computer system. That's an internal control. Another internal control could be, is reconciling your bank statement. You write checks all month at the business, you write checks, you make deposits, the bank records everything as well and sends you a bank statement. And then what you have to do at the end of every month is prepare a bank reconciliation to say, is our cash equal to the bank's cash? And there'll be adjustments. So what we're doing today is we're going to do a couple of bank reconciliations. Okay, so internal control is a system that we have to prevent, detect, and correct errors and fraud. And the board of directors and management is responsible for it. Okay, it starts at the top. Every organization has to have a system of internal controls. Okay, so what we're going to be doing for this chapter is doing a bank reconciliation. So what I've got on the screen here is a basic bank reconciliation form. You should absolutely know this. This is what you need to know for this chapter. When we do a bank reconciliation, we're trying to prove that our cash recorded is equal to the bank's, what the bank's recorded, and that there aren't errors or omissions or fraud going on. So the basic bank reconciliation form, on the left side, you start with the bank balance, make some adjustments, and come up with the adjusted bank balance. On the right side, you start with the book balance, what's on our general ledger, make some adjustments, and come up with the adjusted balance. So I'm going to be quiet for a moment while I see I see a lot of people writing this down. So I'll wait, and then we'll move on in just a moment. We're going to use this bank reconciliation over and over today. Okay, so now I'm going to talk about each of these items. So we're going to talk about each of the items on our bank reconciliation. So what we're trying to do is we're trying to say, here's my cash balance on my books. So this is what I've recorded. I've done all my transactions in cash. This is what I end up with. So it will never be the same as our bank balance. There's timing errors between the two, and then there can be adjustments we need to make. So on the left side, what we're doing is we're starting with the bank side. So the bank gives us their bank balance. We have a couple adjustments to make. The first one is called deposits in transit. Deposits in transit are deposits that we have made that the bank hasn't recorded yet. You know, when you go into the bank, sometimes there'll be a sign there that says all deposits received after 4 p.m. are posted the next day. So if you go in on October 31st and make a deposit, at 4 p.m. or 4:30 p.m., it's not going to show up in the bank statement until November 1st. If your bank statement cuts off October 31st, that deposit you made will be a deposit in transit. You also, in theory, could take, write a check or send a check in by mail to the bank, and that would not be received in time for the bank statement, possibly. So those are called deposits in transit. They have to be added to the bank balance because the bank doesn't have them yet. The next category is outstanding checks. Outstanding checks are checks that we've written that have not yet been cashed. So we've written checks to pay our bills, we've sent them out, and our vendors have not deposited them yet. So those are outstanding checks. The next item down, if the bank makes a mistake and we contact the bank and said, hey, you made a mistake, they have to add or subtract. We don't know what direction that is. And then we get an adjusted bank balance. So we start with the bank balance, the initial balance off the bank statement. We add any deposits in transit, we subtract our outstanding checks, and then we add or subtract any errors, and we come up with the adjusted bank balance. Okay, so that's one half of our reconciliation. Now the reconciliation, what we're trying to do is prove that the bank balance is equal to our book balance. So now we move over to the other side. The book balance is the balance in our general ledger. So this is after we've recorded all our journal entries, all our transactions. We start with the general ledger balance. What we're going to do that is we're going to add these transactions that we've not recorded. So we get our bank statement. There'll be things on the bank statement. For example, a bank collection. Oftentimes, companies, when you pay, say, a credit card bill, you'll send it to the company. You're actually sending it to a bank. And the bank will record the receipt of the deposit and then send notification to the company. So we can have on the bank side, the book side, we may have deposits that the bank collected on our behalf that we've not yet recorded. We can have interest revenue. You get your bank statement, you might have gotten some interest. You have to record that because you don't have that. And then EFT, electronic funds transfer, if anyone's wired money to us, that'll be on the bank statement as well. So those are all things we need to add to the book balance. And then we're going to subtract from the book balance service charges. So if the bank charges us a service charge every month, we need to subtract that. NSF check, non-sufficient funds. So this is a case where we have deposited a check. So a customer's written us a check. We deposit the check. The customer doesn't have enough funds in their account, so the check bounces, so to speak. So the check is returned to us for NSF, non-sufficient funds, so the bank charges our account for that check. EFT payments, we can electronic funds transfer. We can transfer wire funds out, and if we have not recorded those, we need to do that as well. And then we have add or subtract book errors. Those can go in either way. And then we come up with our adjusted balance of the book balance. At the end of all of this, when we're all done, these two, the adjusted bank balance has to be equal to the adjusted book balance. So the bank balance should equal the book balance when everything's done, if we've done our reconciliation correctly. What we're going to do now is we're going to do a couple homework problems. So the homework problems on this are not bad. There's not too many. This is our whole topic for Chapter 4. So this is good to know. Okay, so when we're doing a bank reconciliation, we have two records of our cash. One is our general ledger account, one's the bank statement. The differences result because of a timing lag. The bank ones will work themselves out. The book differences we'll have to write journal entries for. Okay, so what we're going to do is we're going to do a homework problem, and we're going to be using that basic bank reconciliation form. So the same form, we're going to kind of do the homework problem using that form. So what we have here is we have a bank reconciliation, short exercise 4.9. It tells us that the cash account of this corporation reported a balance and gives us a lot of other details. So what I'm going to do here is I'm going to make the bank reconciliation form. I'm not putting any words in it, but this that I've got up there is the same as this, just minus all the words. Okay? So before we get started, you may want to make a little box because we're going to be filling it in. Okay, so what we're going to do in this exercise is I'm just going to start, we're going to kind of read the exercise and put the numbers from the exercise where they go on the form. So the very first sentence says, the cash account of this company reported a balance of $3,640. So the cash account means this is our book balance. Our cash account is on our books. So we have a cash account, and that's our book balance. So we're going to stick that in as our book balance. Now, included were outstanding checks totaling $800. Okay? So we have outstanding checks. So we ask ourselves, where do outstanding checks go in the bank reconciliation? They're going to go on the bank balance under the subtract. So, and I'm going to put minus sign, parentheses around them to show it's a deduction. Outstanding checks are checks we've written that the bank has not processed yet. So we're just going through filling out our bank reconciliation. The next item I see is an August 31st deposit of $300. Okay? So here's an August 31st deposit of $300 that did not appear on the bank statement. Okay? That's an outstanding deposit. So outstanding deposit is called a deposit in transit. Okay? The words deposit in transit are a specific term. So again, you need to know that a deposit in transit is an outstanding deposit, but we don't call it outstanding deposit. We call it deposit in transit. And we're adding that in to our bank balance. Okay, the next sentence says, the bank statement, which came from Tri-State Bank, listed an August 31st balance of $4,775. Okay, so that's telling us the bank balance. So that will go in at the bank balance. So we're just going to work our way down. The next sentence says, included in the bank balance was an August 30th collection of $685 on account from a customer who pays the bank directly. Okay, so there was a collection. So the collections go over here on the bank balance side. We have a bank collection, and that's an addition. And then it also shows us going down the bank statement also shows a $15 service charge. Okay, $15 service charge, we're going to subtract that. Again, I'm putting parentheses around the things I'm subtracting. Next item, $20 of interest revenue. So interest revenue, we're going to add it in. So again, going with my bank reconciliation form, we're going to add in the $20 interest revenue. And then finally, an NSF check. NSF check is non-sufficient funds. This is a check that we have deposited probably from one of our customers that wasn't any good. They didn't have enough money in their account, So we've deposited it, we recorded it, the bank is kicking it back to us saying, no, this isn't any good, so we're going to have to subtract the NSF check. And then what we'll do is we add up both columns. So I'm going to take the 475, add the 300, subtract the 800, and I get the 4,275. Okay? And then the next column, the book column, I'm going to do the same thing. I'm going to add the book balance, add the things I add, subtract the negatives, and I'm going to come up with 4,275. Okay, so at this point, we see that our adjusted bank balance equals our adjusted book balance. So we say that we have balanced the bank statement. We've done a bank reconciliation, and it balances. So now, at this point, we would do journal entries for everything on this side. Okay? The bank balance column, where we have the deposit in transit and the outstanding checks, those are all going to work out over time. The next time, the next statement, the bank will already have those. Those were simply timing errors. But on the right-hand side, the book balance, those are all transactions we need to write journal entries for, because those are things that are not in our books. So this next homework exercise related is write the journal entries for the bank reconciliation. So up at the top is that bank reconciliation. Okay, so that is the bank reconciliation. Now we're going to do the journal entries. And again, we're doing journal entries for the items in this column only. Okay, not for the balances, but for the transactions there. So the very first one, the bank collection, we need to write a journal entry for that. So the first thing we do is cash is impacted by every single one of these things. So what's happening to cash? Well, we have to write a journal to say cash is going up, and then accounts receivable is going down. So that first adjustment, we're going to have a journal entry to debit cash, credit accounts receivable. This is a collection the bank has made on our behalf. So we're getting cash, we're reducing the amount the customer owes us. The next transaction down, we see interest revenue. So interest revenue is interest we've earned on our bank account. So we're getting cash, so we're going to be debiting cash, and we're going to credit interest revenue. So the adjustment we'll make for that one is, again, debit cash because cash is going up, and credit interest revenue. So we've done both of the cash increases. The next one down is the service charge. The service charge is we're being charged $15 by the bank, so we're going to reduce cash. So right before I even start, I know I'm going to credit cash. My debit will be some miscellaneous expense or service charge expense. It's some expense. I'm going to debit for the 15, credit cash. Okay. Okay, next one down, that NSF check. So the NSF check is reducing our cash, so we need to credit cash, and then we'll actually be debiting accounts receivable because that was a customer check that bounced. So the customer still owes us the $55. We have to reflect that our cash went down for it. Okay, now, I'm going to close the first Learning Catalytics question. So everyone that's in front of me, anyone raise their hand if they're having difficulty? It looks like it's been pretty stable. Anyone online? This is your chance. I'm going to close it. I don't normally announce that I'm closing the first question, but just because everyone online, yes? It what? You're better off, just as an aside, why don't you just right up here, this is going to be better, go to learningcatalytics.com. Ignore My Accounting Lab. Because if you're on a mobile device.
Yes, but when I try to go in, I can't. Because
Do it.
it does that and.
Well, I'm saying go to learningcatalytics.com without being in My Accounting Lab. Just do. And that's your My Accounting Lab username and password. Okay? And you were in here originally, right?
Yeah.
You answered it?
I did answer.
Okay, good, good. So you keep signing in because it'll take your answer. I'm going to close this and put up another one, but you keep signing in there. Okay. So you didn't have anybody? You're good? Okay. I'm closing it. Okay. Now, you can ask me what that is. Okay. Okay, we have a new type of Learning Catalytics question coming up. It's not in there yet. Yeah, okay. No, go back to Learning Catalytics.
It's not going. That's not, I'm not right.
Well, you're signing in with the wrong username and password. You're not going to, okay, so I don't know. I mean, you're using the wrong username, so I would think about changing figuring out what your username is, because that's the only thing that will cause that. But that's on a mobile device. You typically can't go in through My Accounting Lab. Typically, you're going to have much better results going straight to learningcatalytics.com. Okay? Okay. So there's a new type of Learning Catalytics question coming up. It's called a region question, so it's different than what we've had. You'll be touching the screen to select your answer, but the thing that you have to remember with this one is you touch the screen like you'll circle a part or do a check mark or do whatever, and then you have to click Submit Your Response. You know how when you press like multiple choice answers, you'll just tap it, it'll take your answer. This one you actually have to submit response. So let's say you did your, you answer your question. In this case, I put a little dot where I wanted, or you could put a check mark or do something. You can just touch the part of the screen where you want to answer, and then you need to click Submit Response. So that's why I just wanted to highlight that this question, you actually have to submit response. So that said now, okay. Oh. Okay, so this question, you need to tap on it's a fun different kind. And see, when I set it up, I draw the area that's right. And look over here. Yeah, exactly. Okay, I'm seeing quite a few right answers. What you're doing is it's the bank reconciliation. The homework problem we just did, you're looking for where you would see, where would you put your outstanding checks? So you can look back at the homework problem we just did, and where do those outstanding checks go? Are they, so basically it's asking you, do you add or subtract them to the bank balance, or do you add or subtract them to the book balance? So right now, I have 108 responses. I'm going to be closing this fairly soon. Again, we've got a gap there, so make sure you've touched where you want your answer to be, and then press submit. We're going to close this one fairly soon. Okay, I'm going to be closing it in 10 seconds, so it's kind of your final opportunity to get your answer in. Okay, and the correct answer was anywhere in the subtract from the bank side. So outstanding checks go in the subtract from the bank side. That's where they would go. That's how you would treat those. Okay, so we have another one. Same type of thing. Now we're asking about where interest revenue would go. So I think okay, so again, on this one, you're looking for where interest revenue would go. Again, refer back to that homework problem we just had. Where on the bank reconciliation did interest revenue go? Interest revenue is interest revenue that the bank has recorded. It's on your bank statement. And where on the bank reconciliation would you put interest revenue? Okay, where would interest revenue go? We're going to be closing this question. Again, a reminder that you have to tap where your answer goes and then press submit, because it looks like I have some people who have not pressed submit. On this type of region question, you have to do submit. Okay, closing in 10 seconds. Okay, and that the interest revenue would go in that box. So the bank reconciliation, you need to know where the items go. Okay, basically, if you have that standard format, that's what we have. That's the takeaway from Chapter 4, the bank reconciliations. Here's where things go on them. Okay, so we have one more question on this topic. Okay, it's a true-false. Every adjustment on the bank side of the bank reconciliation needs to be recorded in the books. true or false. What this question is asking, so if you're not sure how to answer it, what it's asking is on the bank reconciliation form, out of those things, do you need to write journal entries for every single item in both columns or not? So if you think you need to write journal entries for every single item in both columns, you would answer true. If you think that you only need to record the journal entries for the adjustments in one of the columns, then your answer would be false. The homework exercise that we just did, when we did the bank reconciliation, we used the same form. When you do, commonly, the items on the bank side, on the left side, those items are all timing errors. Those are just waiting for the bank to record our deposit because we made it after the cutoff for the statement, or waiting for our customers to cash checks. So none of the things on the left column, none of those get journal entries for, because they are simply timing errors. We don't write a journal entry because the bank hasn't recorded our deposit yet, that it was before, it was made right after the cutoff for the bank statement. So nothing on the left side gets journal entries. Okay? The only things that we write journal entries for are the items on the right-hand side. So this question would need to be false because we're only recording journal entries for the things on the right side. So I'm going to close this question in about 10 seconds. Okay, and that is false. Because we only write journals for items in the on the right side, on the bank, on the book side. The bank side is only timing differences. Okay, next up. So we've made it through Chapter 4. Now Chapter 8, we have a little bit more to do in, so we're going to get started on 8 a little bit today. So first thing to note, Chapter 8. So we've come through Chapter 4. We did one learning objective in Chapter 4, learning objective 3. Now in Chapter 8, we are only covering learning objectives 1, 2, and 6. This is how we can do 2 chapters in 1 week, limited coverage of both chapters. Your homework reflects this. This isn't something that I just made up the last minute. All the homework reflects this. The practice exam reflects this. Everything reflects this limited coverage. So what we're doing with Chapter 8 is we're finishing up the balance sheet. We have gone through cash, we've gone through accounts receivable, inventory, property, plant, and equipment. Now we're down into long-term investments. So Chapter 8 is the end of the balance sheet accounts. Now when we come back after the exam, we'll be starting with liabilities and working our way through the other side of the balance sheet. So Chapter 8 is the end of the assets. We're talking about long-term investments. And when we see on the balance sheet, we have investments that show up in 2 places. We have investments that show up under short-term investments, and we have investments that show up under long-term investments. And this chapter, we're going to be talking about long-term investments. There's going to be a little bit of overlap from when we talked about short-term investments. Back on short-term investments, if we adjusted an investment to market value, we would have unrealized gains and losses. We're going to see that again in this chapter. So you might hear some similar things, and it's intentional. There is some overlap back to the other chapter. Now, we're talking about long-term investments. Long-term investments, right here we have it listed above property, plant, and equipment. Typically, you might see it there, but typically you can also see it down below here. It's going to be somewhere below current assets. Long-term investments are down below. So one type of the long-term investments are bonds. Now, bonds are going to show up in two chapters. They're going to show up in this chapter. They're going to show up in the liabilities chapter. Okay, I'm going to use an example to illustrate bonds. Solar City is a technology startup that started up a couple years ago. And what they do is they install solar panels for businesses and individual homeowners. And they install the solar panels so that your electricity bill can go down. Their name is Solar City. And they sell bonds to finance their business, to give them funds to operate with. And so what they'll do is they'll take bonds and they'll sell them on the market. The reason that they're unusual is they will sell to individual investors. So if I were to go, you can go on the internet and you can go to Solar City's website and they have bonds that you can buy. So you can go in and you can buy, for example, a $1,000 bond. And you might say, oh, I want this I'm going to give you $1,000 Solar City. So Solar City says, okay, here's your bond certificate. We're going to pay you, and I don't know what the interest rates are today, but let's say you buy a 2-year bond from Solar City. So you buy this 2-year bond, you give Solar City $1,000. Solar City says, great, we'll take your $1,000, and then Solar City will pay you interest at preset dates. So they might, I think their bonds pay interest at maturity. So after 2 years, Solar City, you'll present your certificate. Solar City will give you the $1,000 plus the interest that they owe you on the bond. So it's a way for you to make interest on an investment. It's a way for Solar City to borrow money. They would pay you probably, the interest rate might be 1.1%. Let's just say 1% for a 2-year bond. So they're paying you 1%. You get your 1%, and Solar City gets to borrow money at a relatively low rate. If Solar City went to the bank to borrow money, they would pay a much higher rate. Also, banks don't have enough financing for everyone. So corporations will typically issue bonds for financing. Basically, corporations have 3 ways to finance their operations. Through profitable operations where they're generating cash from sales. Okay, so they're growing and they're getting profitable operations. The second way is through debt. So debt is either issuing bonds where they say, here's a $1,000 bond and you pay them $1,000 and they take your $1,000 and they pay you back at some point. Or equity where they issue stock and then they have to pay, they don't have to, but they may pay dividends, but they have to get some kind of rate of return for their investors. So corporations always have this tug of war between, do we issue bonds, issue debt, or do we issue equity? So, and there you can take a whole class on the theory behind that, but the reason we're talking about this right now is a corporation will issue a bond, which is basically how they borrow money. They as an individual, I give Solar City my $1,000, and Solar City says, great, we'll pay you back in 2 years. They'll pay me back in 2 years, or whenever the maturity date is, and they'll pay me interest at that time too. But when this happens, when Solar City issues the bond, we have two entities involved. We have the bond holder. So in this case, this example where I just did it, or not, we have the issuing corporation, We'll start with Solar City. So Solar City, in this example, is the issuing corporation, okay? So Solar City has this $1,000 bonds they're selling to individuals. So Solar City is the issuing corporation. When they issue these bonds, they have bonds payable, and they have interest expense. It's their way to borrow money. Solar City, by the way, is noteworthy because it's one of the few corporations that you as an individual can buy bonds directly from. Usually when corporations or governments issue bonds, they go through a broker, an underwriter, and you can't as an individual go get one little bond. It's not that way. But Solar City makes their bonds available to individuals, and that's why it's a little bit noteworthy. Okay, so Solar City is the issuing corporation. Now, the person that buys the bond or the company that buys the bond, they are known as the investor. Okay, so the bondholder is the investor. Okay, also over here, investment in bonds, this account right here is an asset. Okay, that is an asset. So if I'm a company and I go buy one of Solar City's bonds, I have an investment, an asset, and that's typically a long-term asset if its maturity date's more than a year away, and I will have interest revenue. So on the left here, the investor has the asset, Solar City has a liability. Okay. Okay, so these are two sides of the same coin. We have a bond. A bond can be an investment for the corporation that purchased it. It can also be a liability for the corporation that issued the bond. In this chapter, we're doing the investor side. So we are doing the asset in this chapter. We are dealing with the bond holder, the investor. This is a long-term investment on our balance sheet. In chapter 9, we'll be doing the liability side for the bond issuer. So when we're talking this chapter, we're talking about the investor, the one who purchases the bond, who's loaning the money, so to speak. Okay, I'm going to put up a question for the moment. Okay, so we have a question in Learning Catalytics. I'm going to give you a minute to get that answered. This deals with the Solar City we were just talking about. Okay, got a lot of responses here, but I want to go back because I'm seeing more incorrect answers than I would like. Okay, so just as a refresher, I'm going to be closing this soon, but when we look at this, the investor has the investment in bonds. So that's the entity that's buying the bonds. Solar City is issuing the bonds, so Solar City has the liability. So think about that when you're answering this question. Solar City is issuing the bonds, and Solar City has a liability. The investor is the one purchasing the bonds and has a long-term asset. Okay. Okay, I'm going to stop this one. And what we're going to do now is I'm going to switch over. We have a guest with us. I'm going to switch. Okay, so what we have, come on over here because the camera's here. Right here. Come on, come on. So you can see yourself if you look up there. Yeah. Okay. This is this is Laura Martin from Becker CPA Review. Even if you're not an accounting major, this is great information. So she's going to talk for a few minutes, and then we're going to have one more question before we leave on Learning Catalytics. So I'm going to get you your audio. Hold on just a second.
And this is, I just hold it like this?
Yes.
Okay, perfect.
All right. Can you hear her okay?
Can I tell you if you can?
Yes.
Okay, perfect. All right. Well, good morning. Like Dr. Teets said, my name is Laura Martin. I'm with the Becker CPA Exam Review. For over 50 years, we've helped people successfully pass the CPA exam. So what we decided to do today was to not necessarily talk about the exam, but what we wanted to do is talk about different CPAs, the different roles you play. Back when I started at Becker, I always thought that CPA was the person who hid behind the desk, and they're that person who, didn't talk to anybody and crunched numbers and did taxes, and that was it. Once I started working at Becker, I actually realized there's so many job opportunities available once you become a CPA. So I just wanted to kind of spend a couple minutes to go over the different opportunities with you guys today. Additionally, I have information, and so people online, if you want information, let Amir know, and then he will get it to me. If you guys want information, it's up front as well. So basically, accounting rules the world, right? With accounting, everything goes through accounting. So you can kind of see here the different areas that need CPAs. You have sports, you have local businesses, not-for-profits, health. Those all need somebody to manage their numbers. In fact, you guys know Phil Knight from Nike? He is actually an accountant. Who would have thought, right? The different careers in accounting, you can see there's a whole different gamut of careers. It's not just doing taxes. It's not just being busy. You have the ability for forensic accounting. That seems to be the biggest job opportunity, the biggest job people are looking for now. In fact, I had an instructor who works for the government, and he was doing forensic accounting, and he actually followed the paper trail and was able to convict people who were frauding the government. So if you like fraud, if you like investigating, that's an option that you have. Additionally, everyone's looking to go green, and so they use the CPAs to determine, is it beneficial for us to reduce paper, or how can we go green and still make money within the corporation? And then, of course, you can become a professor. You can become in the education industry, and then also help people who are accounting majors become CPAs. Oh, I wonder if that skipped that. Yep, it may have. So basically, the slide that it skipped for some reason, what employers look for. So when you think about it, you're going to take all these accounting classes and stuff. Employers, when they look for the CPA, when they look to hire CPAs, they're looking for the same qualities they are in other majors. They're looking for leadership skills. They want to make sure you can communicate. Because again, being a CPA, you're not just sitting behind that computer now. You are out there. You're going to client sites. You're auditing their work. You need to be able to communicate what you're looking for. CPAs also sell their firms to potential clients. So they give them the opportunity to grow the business. They also look for team-oriented, and then, of course, they want you to be technologically competent. In terms of team-oriented, it's not uncommon if you work in public accounting that you'll be put on a team, and then you will travel to different customer sites. So, again, you're not just going to sit at your computer. You're going to go travel to different areas, ask for the information, audit those corporations, finish up that, and then you can move into the next corporation or the next place that you're going to audit. So what is a CPA? All CPAs are accountants, but not all accountants are CPAs. And that's important because we're going to see in a couple slides down the road the differences you make once you're a CPA versus just being an accountant. Also, in order to become a CPA, you have to pass a test. That test is a 4-part test, and you have to pass that within 18 months of taking the first exam. Once you pass that exam, then you're licensed as a CPA. So it's not like you just graduate, then all of a sudden you become a CPA. You do have a license test. And of course, CPAs are held to the highest standards because you're managing money. And that's very important that you're ethically sound, which you all are, but you do have that higher, I don't know what I'm looking for. You're professional. Again, what do CPAs do? This kind of tells you what they do. They can do financial reporting. They can prepare taxes, provide a picture of a company's financial health, where they stand, what they need to do, if they can hire jobs, if they need to cut jobs, how they can make that company profitable. And then, of course, the business risk. The business risk would be, oh, does this corporation, do they want to take on and buy somebody else? Do they need to reduce the workload? What do they need to do to make the companies be successful? Then why do you want to become a CPA? Job satisfaction. Believe it or not, CPAs enjoy their job. I don't know what you've heard about CPAs and stuff, but you make some money, you work hard, but at the end of the day, it's the third best job in 2014. Trying to go a little bit quicker here. The good news is that in an economy today where everybody's kind of looking for jobs and people are saying there's not jobs out there, the AICPA is saying that over the next 15 years, 75% of those who belong to the AICPA, who are CPAs, will be retiring. So what does that mean? Job growth. I'll tell you, in Cleveland, I've been with Becker for 5 years, I have never seen more firms looking for CPAs. So it gives you the opportunity for that career once you do graduate. And then here's the earning potential. And basically what this is saying is that if you become an accountant, you will be status quo throughout your careers. But once you become a CPA, you have the ability to grow, you have the ability to be promoted, and then the difference between just being that accountant and being that CPA could be $1 million difference over the course of your career. So real quick, just to talk a little bit about the different careers. This was the top 100 places to work. You can see 23, 61, 65, 78, and 80 are all CPA firms. So this kind of gives you an idea of people do like their job. They do like working as a CPA. They do look like working for the accounting firm. The good news, all the firms listed, Plant Moran, Deloitte, PwC, EY, KPMG, those are all Cleveland firms. Well, they're all located in Cleveland. And then you have Deloitte, PwC, Ernst, and then KPMG are all Big Four firms as well. Public versus industry, and this is what I'll leave you guys with. There's different types of career paths, different types of opportunities you have. The public accountant would where you have the external accountants. The public accountant would be where you work for the accounting firm. That is where you work, say you work at Deloitte, and then Deloitte assigns you to a team, and you go and audit different corporations. Okay? The industry is more of the internal client. So think of industry as corporations. For instance, Quicken Loans. If you go work at Quicken Loans, you're a CPA, you'll do more internal audits versus going externally and auditing external clients. The difference between public versus private or industry is public has a tendency to have busy season. Busy season, you can work anywhere from 60 hours a week, 60 to 80 hours a week. Industry is more of work-life balance, 8 to 5, maybe at month end you work a little bit later, but it gives you the work-life balance. I will tell you with public accounting, you're looking to make anywhere from $45,000 to $60,000 coming out of school if you pass the CPA exam. With the industry, it's a little bit less because, again, you do have that work-life balance. You don't necessarily work as many hours. This gives you some idea of the different accounting specialties that they have in public accounting. Public accounting, you have your Big Four, then you have your regional firms, then you have your smaller firms. So that kind of gives you an idea of the diversity of the different firms. And then the roles in the public accounting, you first start as staff. And then once you pass the CPA exam, you have the ability to get promoted. And you can see as you move along the public accounting different roles, you can see how much the salary increases over time. All again, it's once you do pass the CPA exam. And then the different industry sectors, you can see there's a whole gamut. There's all different areas that you can work if you do work in industry. Again, with industry, we're looking at corporations. We're looking at more non-public places. And then the role within industry, you can see you have the staff accountant, the senior accountant, and then you work all the way up to the CFO. So think about it. All the different places all need a CFO, right? And most CFOs are CPAs. So that gives you the opportunity to become a CFO if you choose. So I think as That's it. Okay, thank you. I think I have a minute.
They will contact you if they need more information on anything.
Okay.
Right?
Yep, that's fine.
Okay.
That's fine.
Emails on this side. So I would also say that I just sent a question out in Learning Catalytics. Make sure you've answered it. So make sure, right now I'm looking at, I'm not going to display it on the screen. 77 people have answered right now. So once you've answered it and submitted your answer, you should get it. You should get it, right? Then we are done with class for today. So we will start up again fresh on Wednesday. See you then.